Morning, Andrew Cooper here, Advice for Living Financial Planning in Diamond Creek. Just two items today on this short video, one for those of you who are on age pension and one for people who are still working. For those of you who are on age pension, last weekend the federal government changed what it's called the deeming rates for income assessment. Now, for those of you not familiar with that, what it is, the deeming rates are an amount that the government assumes that you are earning from the money you have invested. Now, and how it works is now the first $50,000, actually $51,800 that you have in the bank, the government will now assume that you are earning 1% interest on that. It was previously 1.75%. They'll now assume that you're earning 1% of interest, and of course 1% of $50,000, $500. So they will add that $500 to your income when they assess your eligibility for age pension. If you've got above $50,000 in the bank, the amount above has been altered from 3.25% down to 3% on that money in excess of the $51,800. Now, it doesn't affect very many people. In fact, most people on age pension are assessed under the other test, which is the assets test. About the only people that will be affected by the income test are those who have lifetime pensions, either private or government lifetime pensions that pay them obviously an ongoing income, but don't have a balance. So most people won't be affected by it, but some of you will, and will get some benefit from it. Not a huge amount, but a little bit. In terms of what you have to do, you actually don't have to do anything. The government will recalculate your pensions. The indications are that it will take until sometime next month before everybody who is affected will get the additional money, but it will be backdated until last week. So the message is it will have some impact for some people, not a lot. And if you are to get extra money, you don't need to do anything. It will just come to you. Second item is about insurance, and this relates to a personal situation. A couple of weeks ago, actually just short of 2 weeks ago, I went to a medical practitioner to get some results, which I thought was no big deal. Okay, we'll go and see what's going on here, and we'll move on from there. As it turned out, less than 24 hours later, on so Friday week ago, I was actually sporting the very latest in heart pacemaker technology. So it was very fortunate. Things could have ended up very badly. As it turns out, things have worked out very fine. And with the pacemaker in on, a long and happy life awaits me as long as the battery doesn't go flat. But the message is a very simple one. With health issues, you're not necessarily going to get advance warning. I had no expectation that anything was wrong until it was. So if you haven't spoken to us about insurance, please do that, because seriously, this stuff happens in an instant, and you can't plan for it. So, and we've certainly seen that as many of you know, in our family now on 2 occasions over the last couple of years. So if you haven't spoken to us about insurance, do that. And again, just to reinforce, if you're affected by the deeming rate changes, then you don't need to do anything. Other than that, markets seem to be going fairly well. There are some issues, but I will address that in my next main newsletter. So anyway, if there's anybody you think may be interested in this video, then please feel free to pass it along. And also, if you've got any questions either about deeming or about insurance, do please let me know.